Indian markets are seen to be resilient because the breadth of the market is significantly improved from the word go, because at the start, the number of declines in the NSE decline ratio were higher, but now if you see, the breadth of the market is looking pretty cheerful. And the key to mark other thing is the India VIX index, because just yesterday when there was a sharp fall in the benchmark indices, there was no stopping, and they at the lowest point for themselves. India VIX for now is trading flat, almost 1% lower right now. 13.6 is the level coming in for India VIX after before the big event. But a lot of movers that we are highlighting. Firstly is Tata Consumers. After that, Goldman Sachs upgrade. That stock is definitely continuing to lead the position of the top gainer. IndusInd Bank too is having an up move, and some of these beaten down names, case in point being Zomato, that is also up around 2%, and Paytm was also one of the news makers, up around 2.5% right we speak. Some of the movers like BEL, they are witnessing a bit of a profit booking. Some of these FMCG counters like Nestle and HUL, they are seen to be a bit under pressure. But all in all, seems like a good day, and what a recovery in the Realty index is what we are witnessing, because yesterday the market sentiment was really bad. There was an announcement with respect to the ready reckoner rate hike in Maharashtra, and that weighed heavy on some of these Realty counters, and the index, but for today, is seen to be recouping some of those losses. But a lot of volatility indeed. But what's the direction that the market is setting them for themselves? Let's try to decode that with Rohit Srivastava, who's joining us on the show right now. Hi Rohit, welcome on the show, and thank you so much for your time. First up, with this new series, a lot of volatility already kicking in. There are big events lined up, Trump announcements as well as RBI monetary policy. But overall, Rohit, how is the trend shaping up for you when it comes to benchmark indices?
So if you're just looking at the Indian indices, and try to discount it without, letting too much of the news flow affect you, then the trend is pretty much positive. Both the daily and weekly RMI momentum indicator that we use are giving bullish signals. So there is no doubt right now that, the markets are going to weaken further. In fact, we've sort of retraced around 50% of the gains that we had seen in the previous, week, where it had almost rallied 1,000 points. And that's a pretty good retracement, which puts us at a, very good place in terms of risk reward to the upside. So I think right around the event, we've already seen markets correct, discount, what may be really happening. And once the news flow is behind us, you should probably see a lot more improvement in the market, is how it's really shaping up right now.
Rohit, so there could be improvement in the market post the announcement. So probably the worst is being priced in, as you mentioned. But let me come to you and ask you about the reversal that we're seeing in the Realty sector today. In fact, after the blowout yesterday, we're seeing very good recovery coming in on Nifty Realty. From here on, where do you see Nifty Realty headed? It's doing pretty well for itself. And in fact, some of the counters are, they're trading upwards of more than 3.5%.
So, Realty could pick up with the market itself, but on a slightly more medium to longer term, I think it's going to take some time. What I mean by that is that when we go to a higher time frame, when I look at the monthly setup for the Realty index, it still looks like it needs to consolidate a lot more before we can, really enter the next stage of growth for the sector itself. So I'll probably give it 3 to 6 months where it can move up and down within a much larger trading range. But slightly longer term, I think the big moves only are going to happen in the later half of the year. But right now, in the very short term, I think the enthusiasm may be more because of the upcoming MPC meeting, where expectations have become pretty high that interest rates are going to be cut.
The outlook on the benchmark indices is seen to be positive, and last time I remember that you gave a bold call on the metal index. But for now, apart from metal index, tell us any other sector that is looking good to you right now, where you will believe that for the April series, the longs can do good.
I think back to financials, because I think that's been one of the leading sectors. It didn't fall much on the way down, so that itself was performance. And on the way up now, we are seeing leadership specifically in NBFCs and of course private banks. followed by that. So I think those segments will continue to attract a lot of investment. They also undervalued segments of the market. So what is happening, not just at a global scale, but also on the domestic scale, is that globally a lot of money is shifting from the more valued US equities into places like Europe and China, which have much better valuations. And I think the same thing happening at a domestic level between sectors that had become stretched on valuations in the last 6 months, to places like financials, which are low hanging metals, which we already discussed, and maybe PSU stocks. Those are also not extremely valued. They've corrected a lot, in fact, over the last 4 to 5 months, and that's where I think money would actually flow into.
Well, certainly take note of that, Rohit. But within financials, Rohit, any particular pocket that is looking interesting to you? Because in the last leg of rally that we have seen in the second half of March, it was the NBFCs that were leading it from the front. A couple of these private banking names were also trying to lend support. But at this point in time, any particular basket within the public, in the PSUs, banking, and the NBFCs that is looking good?
So I'll go back to NBFCs because they've actually seen a good correction. Last few days, we've seen them pull back from the gains that they had made, which therefore puts them at a very good price point, to start the next move higher. So on this dip, I would actually want to go and, pick up on the NBFCs again, because they'll probably be the best performers going forward, especially as RBI has also taken steps to, lower risk weightages for the sector. That's pretty much gives it a fillip, and then you add to that lower rates. It overall, builds a pretty good cycle for the segment.
All right, Rohit, thank you so much for taking the time out and joining us with that.
If you like this video, then like, share and subscribe to ET Now.